Thanks a lot, Sneha. Good afternoon and welcome to the market closing show on Business Today. It's after 3 p.m. and we are going to be getting you all the last 25 minutes of closing action on the D Street. Remember, it's also the last day of the World Economic Forum at Davos. And as Davos concludes, we are going to be getting you everything that you needed to know in case you missed out on some of the action right there. So stay on for that. But let's quickly look at how the markets are trading in the last half an hour of trade. 25,053. We are down by 237 points in trade. It's turning out to be yet another freaky Friday in trade after a day's halt. Yet again, we have slipped to the day's low point, almost 1% gone for the Nifty 50, and we are inching closer to 25,000 mark. It's the Nifty Bank that's also lost some more ground, over 1% losses for the Nifty Bank as well. It's again hovering below 59,000 mark. IT index is flat at the moment with a negative bias, but all the sectors are down into the red. When we look at the broader markets, that's where the maximum pain is being seen among the broader indices. 1.7% loss for the mid caps, small caps also down by nearly 1.8%. So it's not just the large caps, but even the broader markets feeling the pinch today. Metals down by 0.8% as well, and that's what is also being seen as a drag. Don't lose sight of India VIX, that's still up by about 5% at 14 odd levels right now. So the fear in the index is continuing to grow even deeper, now up by 6% and near the day's high point. So keep an eye out on India VIX at this point in time. Which are the stocks that are dragging and gaining? Some of them that are holding their ground despite all this weakness: Dr. Reddy's, Tech Mahindra and Hindustan Unilever, up by anywhere between 0.8% to 1.5% in trade. Also names like Hindalco, Bajaj Auto and ONGC, about 0.5% higher each. But the ones that are losing ground, Adani Group stocks have faced a lot of pressure today. Over 10% of a loss for the flagship firm Adani Enterprises. Adani Ports down by 7%. Eternal has also lost a lot of those gains that it had garnered yesterday, about 6% lower in trade. Cipla is down post earnings. Jio Finance and Axis Bank is also trading lower. Remember, the Adani Group stocks are down by up to 11% in trade. Remember, it's the US SEC that is looking and seeking for some opportunities to send summons to the Adani Group and Mr. Gautam Adani and Sagar Adani at this point in time. And that's where the pressure is emerging really from. And that's why you see all the group stocks deep into the red, be it Adani Enterprises, Adani Ports, Adani Power, Adani Green, Ambuja Cements, all of them are down in the red. And that's where the pressure is emanating from as well. So that's how the market movement is. But let's shift focus to Davos. As Davos concludes, the annual gathering has seen world leaders, CEOs and influential figures convene, fostering discussions on peace and global issues. India's significant participation and a memorable session on football's global impact has also stood out as far as the Davos sessions are concerned. On the sidelines of the World Economic Forum at Davos 2026, India Today's Rajdeep Sardesai and Business Today's group editor Siddharth Zorabi have spoken to top global economists like even Geeta Gopinath, top bankers like Amitabh Chaudhry, C.S. Setty, chairman of SBI, Union Minister Prahlad Joshi, to really understand what is on top of their mind in this Davos 2026. Let's listen in to an excerpt from all of those chats.
We're speaking at a time of great uncertainty, and it seems to be sooner or later affecting economies across the world. Even as we speak, the rupee has gone to its lowest against the dollar. We had a 1,000-point plus drop in the markets yesterday. Are you getting a sense that 2026 is going to be a year of uncertainty when it comes to economies across the world, including India?
It is going to be high levels of uncertainty and it's going to be high levels of volatility. So we will see markets drop, we will see them come back up, we will see currencies move, probably more than what we saw in 2025. Now, I was of the view that we were past peak tariffs in 2025 coming into 2026 because, one, there's the Supreme Court decision that has to come out, and there are the midterm elections where, frankly, tariffs are raising inflation in the US and it's leading to an affordability problem, and that is consequential for elections. But the year has started out in a perplexing way, with the whole Greenland piece and a rupture of relations between the US and the European Union, which was not something that was on the cards last year.
Because the IMF, for example, has projected for India itself, what? 7.3% for 25, 26, and perhaps slowing down a bit into 26, 27, 6.4, 6.3. Do any of those projections hold in this Trumpian world order? Should we be looking at them in the first instance?
Again, it is a good, useful indicator. I have to say that 2025 played out about what was projected for the world. You know, it was, I think they predicted 3.2 and it ended up 3.3, slightly better, but the ballpark was really good. So it is a useful number to keep in mind. But that said, we are certainly, you know, playing the roulette rule quite a bit these days and hoping for the global economy to all hang together.
Because you wrote an interesting article recently in the Financial Times. You argue that 2025 created an illusion of stability, with global growth holding up despite tariffs, policy chaos and rising uncertainty. Do you seem to believe, when you say it's created an illusion of stability, do you believe that illusion will hold, or sooner or later ruptures will be seen in economies across the world?
Well, I think one of two things are likely. One is, at the minimum, I expect that there will be a slow, you know, hit to living standards over time, because structural changes of the kind that we're seeing, you don't see it showing up immediately in GDP numbers. It weakens the economic potential slowly, and then it adds up over time. That's why I gave the example of Brexit in that article, which is in the 2 years after Brexit, investment in the UK went up. And everybody said, oh, well, this is much ado about nothing. But actually, that was not the case. In fact, investment started slowing and really slowed relative to what it would have been in the absence of Brexit. Also, the other thing I want to keep in mind is that while tariffs were a headwind, you had a good tailwind that came from AI. And that played a very important role. You know, the investment boom in AI, the stock market-driven wealth increases in AI, all of those helped growth. The fiscal stimulus, the fiscal spending that happened in China, Germany, some in the US, more happening this year in the US, all of that is offsetting it. So I'd like to push back on this basic sense that somehow tariffs haven't done much. They've actually played out the way you would expect, keeping in mind that the average tariff rate is lower than what the sticker shock numbers are.
I want to ask you a broader question on reforms again. 2025, very clearly a big year for reforms. Prime Minister Modi has indicated that path will continue in 2026. So, you know, we started this conversation with a broader thing. What's your own belief about the reform story of India and how you expect it to pan out?
So I was just listening to the minister yesterday in your India Today conversation. I think one point which we all must recognize, that lot of rationalization of the regulations and laws, compliance burden on the industry is sought to be reduced. Labor codes is a big reform which has been there in discussion for a long time, and now the way the industry has taken and reorienting the labor policies to suit the codes is a very, very important development in my view. So the reforms objective of Government of India is to ensure that ease of doing business, and also give confidence to the investors that this is one country which will continue on the reforms path. But if I have to really ask one thing, I think we have also been mentioning from our house point of view, is that while the fiscal prudence is there on the Government of India side, the same level of prudence has to come on the state level, because the states have to play an important role. And I see that almost 9 major states representing in Davos, presenting their industrial policies and investment climate, is very good development in our view.
By a comparison between the mood of the Indian CEO and the global CEOs, Indian CEOs dealing with their own challenges, but the global CEOs far more pessimistic perhaps than they were in the past.
You captured it quite well. I think Indian CEOs generally are optimistic about the Indian economy. The growth forecasts have come in from IMF. The local economists have also been talking about 7.5% kind of growth this year and next year. So in that sense, the domestic demand is there. Opportunities are there. Obviously, the private capex is not picked up, but the larger groups are obviously finding their spots where they are investing money, and they do believe that Indian economy will continue to do well. Global CEOs have a different problem. They don't know what is going to happen tomorrow, how the pack of cards will change, how the supply chains need to change, how tariffs could change, how, some countries who are friends suddenly are, kind of battling with each other in terms of some cyber rattling going on. So in that sense, I think there are many more variables to deal with. But the overall world economy forecast still remains pretty decent. So in spite of all that is going on, it appears that they are managing these challenges well. But yes, there does come a point where you feel not only frustrated, but you feel, what are we kind of really doing on a day-to-day basis, given so many variables that seem to be at play all the time.
Absolutely, and policy certainty is something that most CEOs would appreciate, but in the American context and its impact, that is a clear tough one. Let's talk about our domestic story, and this is to do with the health of the banking system. I always ask you this whenever I talk, because over the last 4-5 years in conversations with you, we've tried to capture the health of the banking system. That question to you today, what would be the response?
No, the health of the banking system remains extremely strong. We did, over the last 18 to 24 months, saw a bit of a retail cycle developing. The retail credit cost did shoot up. Gradually, slowly, it has stabilized. It is coming down for sure. The retail costs are not only stabilizing, in some cases, they've started going down. The bank, results which have just been coming out over the last 2 weeks are a clear indication of that. So in that sense, wholesale side is benign. SME, everyone seems to be watchful while it is growing at a rapid pace. No real signs of any problem as yet, and retail cycle is turned. So the profits are at record high. Capital ratios are pretty solid. On the credit side, things seem to be moving in the right direction. So I would say banks' balance sheets are relatively quite strong, as they were last year and a couple of years back also.
One of the things, and since we are at Davos at the World Economic Forum, is how geopolitically and geoeconomically the consensus on climate change and renewable energy is being changed by one particular country. Many of the pacts the United States of America is pulling out. Europe remains committed. We have gone beyond even our commitments, like you also pointed out. Do you see there is some risk factor on account of global changes and approach towards renewable energy? The United States is again prioritizing crude oil. Is that a risk to India's ambitions in this space?
I don't think that is a risk for us, according to me, because there are many countries in the world even today which prefer renewable energy, but especially in the global south. The requirement is finance. First thing is finance. Second thing is technology. Third thing, as we go on adding the capacity, the question of grid stabilization for that investment, these are all the things where multilateral bank funding, blended finance, these are all the things which are needed. Otherwise, there are many countries where they are now telling by this year they are going to levy the carbon tax. So this carbon tax issue, naturally wherever India exports and wherever any other country exports, this is an advantage for India, because
not just that, it was also the artificial intelligence that was the focus at Davos of 2026, the world moving towards advancement of AI and the issues surrounding the IT sector as well. So let's listen in to the excerpts on what the IT leaders think about the disruption from artificial intelligence.
With AI and what it means for the IT services sector, the good and bad really, as you see it, the impact of AI on your industry.
Yes, thank you for having me here. And as you called out, we are the only services partner, global GSI for OpenAI. We see tremendous opportunities. From an industry perspective, while AI is a very big inflection point for any services industry, because knowledge is what is getting us commoditized, right? That's really what it is. So the opportunity for us is in two dimensions. One is transform our existing service footprint using AI. It might mean reduction in revenue in some areas, but we want to be proactively transforming our services. That's something which we're doing it proactively. We were one of the first, and our clients have greatly appreciated it. So that will mean some deflation in revenue, but you can also expand your pie because IT services space is a very, very large market. So that's one. The second aspect is AI is also opening up completely new services, completely new areas of discretionary spend, which was not the focus of a lot of tech services firms. Like physical AI is a big area, which is about uh, sensing, understanding, and acting on physical objects, right? Whether it is warehouse management, remote surgery, or managing safety in mines and ports, all of that can be done very, very efficiently using physical AI solutions today.
Will AI kill the back office as we know it?
Yes, the construct of that would look very different. Today, it's very people intensive. The way it is evolving, it will be a lot more agentic and really amplify the potential of people to deliver more, but with significantly lesser number of people. To that extent, the back office operations offers the biggest opportunity to be transformed using AI.
I want you to address one of the cohorts that keep coming and asking us questions on interactions after this. A lot of comments are left on our feeds, and these are related to two. One about hiring, and the other is about skills. In previous conversations, a point that even foreign experts have made is that India has according to them, a good skill set, a base for the AI age. It's only a question of leveraging it. Try and answer that question in two parts. One about the hiring outlook for your company and at a broader industry level, and the AI skill preparedness that prospective employees need to deploy.
So look, I think as far as hiring is concerned, that obviously depends in a large part on the revenue outlook. But I do feel that us and all of our peers have expressed more optimism about what is going to be possible this year. So it should be a positive outlook. As far as the training piece is concerned, look, we've invested very heavily in AI training for all of our staff. We have made licenses available, whether it's Microsoft Copilot or Perplexity for the sales teams or Gemini 2.5 to our teams in a very significant fashion. Through, as you know, Siddharth, Tech Mahindra has also incubated Mahindra University, which is a full-fledged university from undergraduate through to postgraduate programs with over 300 PhD scholars. And so we're also utilizing the PhD capabilities of Mahindra University and the training programs with Mahindra University to upskill not just our teams but also our client teams, right? So it's a wonderful opportunity to utilize this world-class educational infrastructure we built in Hyderabad, for the benefit of these students and these employees.
James, that sounds like compressing centuries of development, progress, innovation into one moment. Am I correct in sort of?
Oh, you're absolutely correct. I mean, there's a real example of this in the sense that look at what AlphaFold did, right? Because up until before AlphaFold, thanks to my colleagues got a Nobel Prize for this. Before that, we only understood the structure of about 150,000 proteins because we're doing them one at a time in labs with X-ray crystallography, one at a time. But with AlphaFold, we're able to do all 200 million proteins known to science. Now, imagine if we'd kept going one protein at a time. It would have taken probably a few hundred years to get to all of them. With AlphaFold, we did all of them in one go. So you start to see the same kinds of things happen in material discovery. One of our AI system, Genome, was able to discover something like 2.2 million crystals. And of those, were not known to exist before. And of those, we've been able to establish that something like 300,000 of them are stable enough to be synthesized. So example after example, you're seeing this compression because now you can do scientific discovery at a scale and scope that's breathtaking. And I think that's exciting.
And in a way, it is democratizing science as well. It's making it perhaps accessible to millions of more people than was the case before AI scaled up.
Oh, absolutely. I'll give you a tangible example. I mentioned AlphaFold. So today, when that breakthrough happened, we open sourced and open accessed access to the protein structures that we predicted. And up until now, so far, something like 3.5 million researchers around the world have accessed it. In fact, I think about 180,000 of them are in India. And now what that's done is that researchers who would not otherwise been able to work on certain kinds of problems, either neglected diseases and a variety of things, all around the world can now do that work. So
Right, and the instability at the geopolitical front with no deal yet with the United States of America. The big question is, are there shrinking opportunities for India? Here's what top leaders from India Inc. and the tycoons in India really think about India's trade positions.
Let's turn the outlook to the steel sector. 2025 has been a decent year, one would imagine, on the back of both domestic impulses and what is happening externally. Give us a sense of your own demand outlook for the current year and how is it likely to pan out?
Yeah. So, there are a few things happening in the steel industry which impacts us. One is, of course, given our footprint in Europe, we are impacted by the trade issues between US and Europe, which we never thought would be there, so, right? Yeah. So, and the supply chains were built on the assumption that there will never be a problem between the US and EU. Right, and UK as well. So now we have a 25% duty on UK and 50% on Netherlands from where we used to send steel. So there is that part of it which is obviously disruptive for us. But the demand in Europe is starting to look slightly better because Europe is also going to spend a lot more on infrastructure and defense. In India,
they do have some lessons that they have learned in the recent past.
Yeah. So even if you look at Germany, who have traditionally been very tight on their purse strings, opening up and saying they'll spend €1 trillion, which is a lot. India has been blessed with good demand because of the actions of the government and the focus on infrastructure, etc. But it's not been a great year from a profitability or pricing point of view because we've all been impacted by what's happening in China. And the Chinese recovery doesn't seem imminent. They are taking actions, but 5% growth is fantastic for an economy of the size of China. But still the construction industry, which has a huge impact on steel, is going to take a long time to recover. So we're seeing the impact of that on prices and margins, but we think the worst is behind us and hopefully going forward we'll see better times.
And what would you term as the point of recovery?
I think it's starting to happen already because what has been happening in China is while the production has been dropping, the consumption has been dropping even more. But the exports, while it's still at a very high level, seems to have stabilized at 110, 120 million tons. The anti-involution policy announced by the government, hopefully will have an impact. We are still waiting for, details which will give us some more optimism. But at least they're pointing in towards a direction where they are working on domestic consumption, which is good for the world. Because, one thing which I want to highlight also, it's not just steel. I mean, you look at China's trade surplus, you look at what they call indirect steel exports. They've exported more products consuming steel than they've exported steel. So whether it's 8 million cars or whether it is equipment, construction equipment. So I think what the steel industry faced over the last 10 years, 15 years because of excess capacity in China, I think a lot of user industries and consuming industries are going to see the same impact. So I think as a government, as a country, we need to take a more holistic, multi-sectoral long-term view.
Before we move on to other Davos news flow that's coming in from the World Economic Forum, let's also keep an attention on the rupee, which has now slumped to a fresh record low level as well. Indian rupee is now trading at 91.95 against the US dollar. Remember, this is the lowest level that the rupee has been trading at. With this, in this week so far, the rupee has dropped by 1%. In January alone, the rupee has fallen by 2%. This is added on to the slide that we have seen in the rupee in the year 2025 when the rupee weakened by 5%. So in all, almost 7% of losses for rupee all of 2025 and in 2026 so far. What is keeping the rupee under pressure? Dollar outflows, importer payments have added on to the pressure. FIF outflows have been significant from funds within Indian markets, and that's been also keeping the rupee under pressure. Even though the Reserve Bank of India is intervening to support the rupee, the currency's downward trend continues despite the efforts that have been coming in as well. Remember, we've been seeing that the rupee has been consistently declining for the last couple of weeks. In January, now has slipped by about 2% already in 2026. Foreign investors have also pulled out about $3.5 billion from Indian equities this month already. That's added on to the pressure in the rupee as well. This has also pushed down the Nifty by 5% in January, and the rupee has also fallen to an all-time low level as well. That we will also look at the markets, viewers. 25,050 is where you have the markets shutting shop at, 241 points lower. That's the point at which the Nifty has shut shop. Let's also look at the Nifty Bank there. Almost a percent loss for the Nifty today. The Nifty Bank is slightly even weaker than the Nifty 50. We've seen 1.2% declines there, ending at 58,473. The mid and the small caps have been feeling a bigger pinch there, both down by 1.7, 1.8%. So the broader market sell-off has deepened, with all the sectors ending the session in the red. Only India wicks up by about 6 odd percent is what we are looking at as far as the rupee, the markets are concerned. Of course, the Adani Group stocks, they have been, of course, feeling the pinch. 1.5 lakh crore rupees of a wipeout is what we've seen from the Adani Group stocks, as the stocks have fallen by up to 15%. Look at what Adani Enterprises seen, about 10.6% lower, Adani Ports by 7.8% lower, Zomato down 6%. But all the Adani stocks are down in trade, leading to 1.4, 1.5 lakh crore rupees of a wipeout in the market cap that we have seen. This has also put the pressure on the markets in this week so far. The Nifty has seen, the overall markets have actually seen about a 16 lakh crore rupees of a rout, and investors have been at the receiving end of this one as well. And therefore, you do see that the markets are in deep trouble, at least by the end of this week. Breaking news coming in on your screens, viewers. The leaders of opposition, Rahul, has now reiterated dead economy jibe. Rahul has again said that Trump's tariff is badly hurting India. He's also said job losses and the reality of a dead economy is coming up in front. He's also said that Prime Minister Modi has offered no relief and he's mum on tariffs. Rahul has also pointed out by saying 4.5 crore jobs have also been at the receiving end. Lakhs of businesses are at stake because of the geopolitical uncertainties, the tariff uncertainties that the economy is facing, and therefore he has reiterated his dead economy jibe coming up. Remember, he's saying that Trump's tariffs are badly hurting India, causing a lot of job losses, and the reality of a dead economy is something that we have to keep an eye out on. He's also said Prime Minister Modi has offered no relief to anyone on the back of these global uncertainties, and he's mum on tariffs. 4.5 crore jobs have been at the receiving end, is what Rahul has also pointed out there as well. Right, viewers, so that's as far as the breaking news is coming in, but we'll leave you at that. It's a wrap on the Business Today show, the closing edition of Market Today. Thank you very much for watching in. Of course, there's a long weekend and the markets will be back on Tuesday morning, and stay tuned with us for all the morning opening action. After all the Davos action, the focus next week shifts on the upcoming union budget of 2026. So stay tuned for that on Tuesday morning at 9 a.m. for all the market opening action now.